All right, I think we can get started. Probably we'll have a few more people joining in soon. I think they can catch up. It should be fine. Again, thanks a lot everyone for joining this session on a busy Monday morning in Dhaka, especially given the fact that a lot of us are already fasting. So some housekeeping rules. So please feel free to raise your hands if you have any question. I have actually enabled the allow to talk function, and you can actually unmute yourself to read out your question. I think it would be a lot more engaging that way. Yeah. So for context, so this webinar is arranged particularly for the FinTech Society for Bangladesh Forum, which is an excellent platform curated by Fahim Bhai. And one of the recurring topics that came up was open banking and open APIs for Bangladesh, right? In fact, a few of us from the forum have created a focus group to work on a proposal to be presented to relevant regulatory body. So in order to aid the process and for more general awareness and education, we figured it would be good to hear from someone who's operating in this area and in similar emerging markets to understand the challenges and the recommendation and the lessons learned, right? And hence we have invited Todd to share his experience of navigating these challenges and I guess the best practices of working with regulators and the various financial institutions, right? Brief intro about Todd. He's the CEO and co-founder of Brankas. He did his undergrad from UC Irvine and master's in public policy from Harvard. In previous lives, he was in the US Peace Corps and worked as a consultant in Southeast Asia. And currently he's also serving as the director of Open Banking Exchange, which is a nonprofit community based in Europe for the proliferation and education of open banking across the world. So without further ado, I'll hand it over to Todd. So Todd, you can take it away.
Cool. Thank you, Anik. And thank you so much to the attendees. I appreciate you joining on a Monday morning and happy to share some of my observations about what's happening in open finance in emerging markets with a view towards Southeast Asia. This is meant to be for your benefit, so please ask questions, interrupt, clarify. I mean, it's the purpose is not me talking for 45 minutes. It's to actually just to spur some conversation and some thinking about what open finance in Bangladesh might look like as the sector is taking off. But very grateful to be able to speak with you, many of whom I see many familiar names, but for those of you who I haven't met, thanks so much for joining. Anik gave me a quick introduction, but basically Brankas is a technology startup operating across Southeast Asia. We've been around for about 5 years. We're about 130 staff now, including several in Bangladesh, some outstanding engineering talent. We work on what we call the supply side and the demand side of open banking or open finance. So what that means is API aggregation, which is simplifying and providing simple access to a single API that standardizes integration with banks or non-bank financial service providers, typically for data, payments, and some product origination, like loans or BNPL or retail account opening. But we also provide a publishing platform and basically a middleware for financial institutions to publish their own external APIs as commercial products. So there will be some examples of that, not Brankas, but just examples of what commercial APIs look like. And I think you all know well enough between Indonesia and now Philippines and other markets, there's just a lot happening in Southeast Asia fintech that provides maybe a window between, the India case study, which is much more top down, and the Southeast Asia case study, which is very bottom up, led by industry. There's some interesting lessons to learn. So, okay. I want to cover 3 main points here that I think are, you can call them misconceptions or just sort of my main observations. Number 1 is what I'm calling API banking. You can also call it open finance. It's a new revenue driver and a new channel for sales, onboarding, and servicing. So it's important, especially for those of you who are at banks, external APIs and open banking, this does not need to be simply some kind of compliance activity. And open banking is definitely not only data sharing. In fact, I think the data sharing and customer, share your transactions or balance, I think that's actually the most boring part of open banking. I think the more exciting stuff is actually making products available and new channels available by providing APIs. Number two is the API banking tech stack has now, I think, been defined. And there's a lot of open source components now that a financial service provider can use to basically launch in a very short period of time without needing to go through a Accenture $20 million transformation. We're also very, very early, and I think that's good for opportunity, good for startup, but it also means that there's a lot of clarification with potential institution that we're partnering with. Okay, so what is open finance or API banking? I want to just first expand. This is way bigger than just sharing data or enabling a payments API. So these are some examples. And what I want to do first is actually go through real world examples so that you can see what open banking or open finance in Southeast Asia actually looks like today, and where I think kind of the most exciting new innovations are. So one is everything payments, right? Whether it's retail payments for e-commerce or for topping up your e-wallet, your Nagad or Bcash wallet, where you can link your bank account and move funds back and forth. Corporate disbursements, remittances, of which there's massive remittance flows into Bangladesh, and it's still very, very expensive for the user. And there still isn't things like account validation and transaction status notifications, and so there's a lot to solve in the remittance, as well as cryptocurrency. And for anyone who is holding or has done crypto trades, especially for self-custody, it is even more painful than doing a bank transfer. There's multiple steps involved, multiple parties, and each time there's a fee involved. So everything really payments. Two, identity and authentication, especially in countries that don't have a single national eID. So if in the absence of Aadhaar India or SingPass in Singapore, identity and authentication actually becomes a very important commercial product, where if I've already KYC'd a customer, I can actually sell KYC as a service, and my partner can actually use my KYC and just use the authentication just like a login with Google. And I'll share some examples. Account opening, so actually activating a new customer. Loan origination, that's everything from consumer cash loans to SME merchant financing on an e-commerce site, to salary advances that live inside of an HRIS platform, to buy now, pay later that lives on a checkout page, where multiple options are available. Card issuing, and actually providing virtual card issuing on a third-party site. Investments in brokerage, which is really, this is really the cutting edge in Indonesia, and in Philippines, the very first kind of neo brokerages are using external APIs to power digital banks and e-wallets, as well as API marketplace models and third-party services. So, okay, some examples. This is the first example. It's the most boring example. This is out of Europe. So when most people hear open banking, they think of this, which is, in the UK, I have a Lloyd's bank account. I now want to link my Santander or my Barclays account, and I approve the account linking, and now I can see my account balance. Fine, right? This is valuable for in Southeast Asia and in Bangladesh. This would be very useful for consumer and SME credit scoring. So not necessarily for financial management apps, which are very early, but for consumer credit scoring, it's valuable. I think what we have seen in Europe is that retail statement data, the commercial, the pricing will very quickly become competitive and go down to zero very quickly. We're already seeing price pressure in Indonesia, where then aggregators have to decide, do we start building credit scores and compete with Experian, or do we continue building a pipe, an aggregation of APIs, but then we move up the value chain? So maybe we offer income and expense categorization. Maybe we offer payments APIs alongside data APIs. Maybe we offer data outside of financial services, telco data and others, right? But open banking transaction data commoditizes very, very quickly. And it's sort of the starting point, and it's the least, I think, interesting in terms of commercialization. But statement data is also very valuable for corporates. So Brankas in Singapore, our main account in Singapore is with UOB, and we have authorized linking of our UOB corporate account with Xero, the accounting app. So now we can get real-time transactions. So for reconciliation, transaction management, and just day-to-day financial operations, corporate statement data can be really valuable, typically as a plug-in to ERP or accounting systems. So we already see that in Singapore. Retail payments. This is in the Philippines. Probably the Nagad Bcash, some integrations look like this, but basically this is Gcash in Philippines, where as a Gcash user inside the Gcash app, I can link my Union Bank account. So I confirm, I choose the cash in button to pull funds into my wallet. I choose Union Bank as the debiting bank. I authenticate using my online banking credentials. I confirm and authenticate using a one-time password. I can then see the accounts that are linked to my credentials. I choose the account I want to link, and then I just set the amount that I want to top up. And then Gcash, it basically is an approved party, an approved third-party provider from Union Bank to debit my account and credit my Union Bank wallet. And this whole process takes, 15 seconds to activate. And Union Bank provides a token so that I only have to re-authenticate, I think, once every 90 days. So beyond that, in the future, in this cash in button, I just see my Union Bank account and I can just go tap, add 500 pesos, and then I'm done. So retail payments is very valuable for e-wallet, for digital banks, for e-commerce, for payment gateways that want to offer bank transfer as a payment method. And there's a lot of opportunity for to basically disintermediate a lot of the middleman payment products that exist today, because this is something that a bank can offer directly, and they can require the merchant to keep an account at that bank so that it's just a same bank transfer at basically zero marginal cost to the bank. Corporate payments or disbursements. So this can be a disbursement API and dashboard, which can sit as a standalone login, or it can live inside the ERP system of the bank or of the client, right? So they can basically, probably many of us on this call have experience using a corporate bank's batch upload function, which is like CSV upload. You wait for the batch to process, then you have to retrieve the output file to check the status. And this provides a direct API so that corporate clients can disperse loans, insurance companies can disperse commissions, companies can disperse payroll or payables, or any expense management platform can offer this. Marketplaces can disperse to sellers, and they want an API so that they don't have to generate and upload CSV files all day long. Pretty simple, but pretty valuable for a B2B use case. Before I go on, Mosinur, did you have a question? Or Anik, are you able to unmute him?
I think he left the meeting.
Okay.
Once he joins, I'll reach out to him again.
Sure.
But in the meantime, if anyone has any question, please feel free to pause, Todd, and ask. Most of you are I have enabled the allow to talk function already. Yeah.
Yep. Okay. So some other examples that we're seeing, right? So more and more we're seeing banks that are looking to actually bring payment gateways or payment processing in-house. So this is an example from a conglomerate in the Philippines where they have a bank, a small bank, and they have a large retail presence for grocery, for pharmacies, they have an airline. So they have a lot of retail consumer brick and mortar properties. And a lot of their online payments, especially COVID, a lot of these transactions came online, and they were basically giving away a lot, like 2 or 3% of their top line to an external payment gateway, right? When in fact, most customers are preferring to pay using payment methods that are on us, that are proprietary to the conglomerate. So the bank has decided to onboard this as a basically they can offer an in-house payment gateway to their corporate clients and to the sister companies of the conglomerate. And then they can prioritize payment methods that are in-house, whether that's paying with your Robinsons bank account, whether it's scanning QR that's using the Robinsons rail, whether it's using a Robinsons card. And then they can add other payment options, and they can choose which external providers they want to use for those payment options. But the payment processing and the hosted checkout page and all that comes in-house. And then they are plugging in APIs from third parties. Crypto on and off ramps. So we're seeing more and more interest from e-commerce and digital banks and e-wallets that want to offer crypto payments as a payment method. And so what we're seeing is, in this example, PDEX, which is a Philippines exchange, where we will be enabling a pay with PDEX, so pay with Binance, pay with an exchange, where you link that payment method, and then when you see your checkout screen, you can then choose which of your Bitcoin, Ether, local stable coin you want to use for payment. You can see the real-time exchange rate, and then you can approve the payment. And then behind the scenes, the exchange is doing the trade, and then the exchange is dispersing the funds to the merchant. So you're still paying in pesos, but in the local currency, but it's the exchange that's doing a real-time conversion in order to fulfill the order on the e-commerce site. Identity and authentication. So this is an example out of Singapore. So SingPass is the government ID, basically, for logging into government websites. But now SingPass, you can use it to log into banks and to e-wallets, actually. So think about the onboarding process for registering for a new bank account, going through the KYC process. The bank then needs to pay Jumio or Onfido for a verification. Or in most cases, there's a 70–80% drop-off rate at registration. And so being able to use SingPass as a registration option is massively, massively easier for the bank. So the example here is when you log into a new website using your Google or using your LinkedIn, right? And there's a login with Google button, which just makes it easy, and you're willing to share some basic account information. This is the same thing, except it's registered, excuse me, registered and validated identity. And we're seeing examples in Indonesia where if I'm already KYC'd with one bank, I can use those credentials to log into a retail brokerage, or to log into a crypto exchange, or to log into a loan website where they have a partnership, and I'm actually authenticating just like log in with Google, but I can log in with my bank, and then the third party is actually paying the bank for the convenience. Because think about it, if you're paying $1 or $2 to Jumio to do KYC, and you have drop off at registration, the willingness to pay for a login, which is basically a one-click KYC, is very, very high. And so I think particularly in Bangladesh, there's a lot of opportunity to offer some kind of authentication as a service to partners of a financial institution that has already done KYC. Account opening through partner apps. So also in the GCash example, they have partnered with CIMB. CIMB is a regional bank in Southeast Asia. And they, inside the GCash e-wallet, I can now apply for a GSave bank account with a 3% credit or 3% interest rate, right? So what's happening here is I do not go through KYC again. I'm using my same e-wallet KYC. If I'm fully verified at the highest tier, I can then agree. I have to go through one basic page of just an AMLA checklist. And then I have a savings account that lives inside my GCash wallet. And CIMB pays GCash basically a success fee for every new customer they onboard. And then it's CIMB's responsibility to basically upsell the customer once they've acquired them. So think about this customer acquisition process compared to opening a branch, hiring agents, telesales, and online marketing, and being able to actually use the KYC of an e-wallet and onboard and create an experience where the e-wallet user is already linked to their bank account, basically in 2 or 3 minutes. So this has been tremendously successful, and the majority of CIMB's customers in the Philippines were acquired through these partner channels. Card issuance. Anik, do you want to share, if you're around, do you want to share just a minute on what this looks like?
Yeah, absolutely. Thanks, Todd. So this is another thing that's like that we are seeing in Southeast Asia, that like some of these internet giants, they're partnering up with the banks in order to issue card at point of checkout, right? So this would be virtual cards, but those are like kind of bilateral partnership between the banks and the internet giants, like e-commerce platforms. So if there is an API-based products, then the banks can essentially enable this card issuance with as many partners as they want, right? So essentially if I'm scrolling through some e-commerce platform, for example, Aajke Deal, and then I see that hey, like Bragg Bank is offering a Visa card at 3% cashback. I'm interested. I click on apply now, and then within the Aajke Deal website or app itself, I can probably apply for my credit card over there, right? In addition, I'll be able to share some verified data, which kind of proves my credit worthiness as well. So everything is kind of put together in a one seamless digital end-to-end application flow. And then once those data is collected by the banks, they can make the underwriting decision. Yeah.
Cool. Thank you, Anik. Okay, a couple more examples, and then so this one I find fascinating. So this is Tokopedia, the largest e-commerce site in Indonesia. They IPO'd, they merged with Gojek, and they just IPO'd this morning in the Indonesia Stock Exchange. So inside, if I am a merchant, if I am excuse me, if I'm a seller on Tokopedia, I can now access inventory financing from at least 11 different partners, where I can apply for the loan or the line of credit. I can share my data back to the potential lenders. The lenders can then agree, they can share their offer on the line of credit that's available. I can approve the line of credit and sign up for it, and I can be funded for my initial request, all in the same session and all inside the Tokopedia app, right? So basically I can choose from a menu of lenders. I can be scored and qualified immediately based on my Tokopedia transaction data. And then I can access that capital basically instantly through a disbursement API that hits my account in Tokopedia or my bank account. Now think of the difference between this origination process and me printing out my Tokopedia seller history and bank statements and then going to BCA Bank and going through an SME inventory financing process. I mean, it's more than a 10x improvement, I would say, especially because SME financing is just, they usually need access quickly, and banks often have a hard time acting fast in providing SME financing. In fact, in Indonesia, there's a 4-to-1 gap in the SME credit demand versus supply available. So this is a great example. This is still open finance. This is APIs connecting from the financial institution to a third-party app for servicing, but it's happening entirely through an e-commerce checkout use case.
I have a quick query here, Todd.
Yes.
Do you know the turnaround time for this? Like, if a merchant is, offered a loan by a bank, how long does it take for the bank to process this in this Tokopedia example?
So I believe most of these, it's instant decisioning. So basically the process is, I as a customer, so I am a merchant. I have my seller history with Tokopedia, right? And they can see, what types of items am I selling? How long have I been around? The GMV of my sales. And so that transaction history will qualify me for different financing. And then all I do to apply is I say, okay, I want a $10,000 line of credit, and and the lenders then surface their offering based on basically what the terms that they've set with Tokopedia. And then I onboard with that lender, and then I approve, and I'm dispersed immediately. So it all happens within the same session. There might be a couple of these where it's a little bit asynchronous, but the intent at least is to provide instant access, but all inside the Tokopedia page.
Oh, that's really great.
Yeah.
That's handy.
Yeah. No, and then you think about it, like, if I am, Investree, for example, I don't have to finance every merchant. I can say only high value electronic sellers with more than a year of selling history, above a GMV of X, and with a customer rating of 4.5 or above, right? I can be very, very specific, but then those, okay, for that group, I will approve instantly. And I'll just let the algorithm do the work.
Yeah, that's nifty. Thanks.
Yeah,
So,
sure.
Todd, it's Khalid here. So it can be do in Android eventually. That you're thinking about some thumb rule. So if there is some thumb rule in the system, and system can automatically predict that, okay, this is the thumb rule, this is the qualified, and only those data can be pushed to the banking system, and bank can work accordingly. So eventually, it's another reverse of open banking model. It's open banking, but bank actually is not sharing the data. The e-commerce platform is sharing the data with the bank, uh, having some thumb rule, and accordingly, the eventual decision engine can be run using the thumb rule.
That's correct. And I will say, what we see so not in SME financing yet, but in consumer financing, so buy now, pay later, the buy now, pay later companies are asking customers, if they choose, to share their banking data to get a higher credit limit for purchases. And we're Brankas is serving some buy now, pay later companies that provide that example. So if I am a customer applying for a BNPL account, and I want to get a higher credit limit, then I can choose to share my bank data through API, and then the BNPL will do some scoring on my income and expenses and cash flow and volatility to make an instant decision about whether I qualify for a higher credit limit. So I would say, that what does open banking data look like in Southeast Asia? It's a mix of bank transaction data and alternative data that's an indicator for salary, right? Or for an indicator for income, which could be your e-commerce shopping history. It could be your e-commerce selling history. It could be telco data, whether you're a postpaid or prepaid user, things like that. Other questions?
No, it's perfect. Okay, it's perfect. Sounds good.
Cool. Yeah.
By now, I think it should give you some more incentivization to open up your bank to offer up loans to different merchants now.
Yep.
Sure.
Hey, Red One. Yeah, thanks. I think the hurdle that banks have to come over is when I show this to banks, I go, this all sounds good, but we don't want to compete alongside the other guys, which to me is like, the ostrich who puts his head in the ground when he gets scared, because you're going to compete anyway. The other lenders are already there. And what I love about this example is this is BFI, which is typically vehicle lending, like motorbikes, right? You have foreign banks like DBS and Commonwealth. You have local banks like BCA and Permata, and you have startups that are all competing alongside each other. And they're not necessarily competing for exactly the same customer base, but yes, they need to agree to offer their products alongside competitors, right? So I find it funny when, the reaction is, well, we want customers to come to us and visit us at the branch. We don't want to compete alongside the other lenders and be commoditized. And my response is like, guys, that's happening anyway. But from a customer acquisition and servicing point of view, it's I think a big difference. And from the SME's perspective, it is, again, 10x, 100x better than the normal way. Okay, moving on. Okay, a couple more examples. API Marketplace. So this is in Europe because I think there aren't any good examples yet in Southeast Asia, but I know that many digital banks are planning for this model. This is where you as a bank become like an Apple App Store or a Google Play Store for third-party financial services, and you become distribution, right? So this is Starling Bank, which offers a marketplace of integrations. Now, some of these are you access the product inside the Starling Bank app, and some of these are you link your Starling Bank account and you can access it on the Wealthify or Wealthsimple app, right? But the point is they are offering this basically as a distribution model for Starling Bank customers to immediately have instant integration with their network of clients. And I give this is an SME example, not a retail example. Or actually, no, retail is on top, business is on the bottom. What I think is fascinating is this is from 2019, but even in 2019, 33% of Starling Bank's customers, business customers, were using one of these 2025 integrations. So this is the bank not as we're going to build a bank's corporate banking portal and transaction banking portal and investment trust portal, and here's our app for A and here's our app for B. No, they provide a good experience. They provide an API platform, and then I as the customer can choose which APIs I want to activate to consume all in one place, either inside the Starling Bank app or on Xero or QuickBooks or inside Slack to actually do approvals, for example, right? So this is a very different model from the vertically integrated, traditional banking model where I own the channels. As the bank, I own the branch channels, I own the ATM channels, I own the app channels, right? This is the bank providing the infrastructure and supporting a network of applications, which is actually where the customers are interacting with the financial services, right? And frankly, like Xero or QuickBooks is probably better at managing payables and providing payables software versus the bank's transaction banking portal, right? And I'm not trying to, criticize the banks. What I'm saying is it's not the bank's expertise. Like providing corporate banking software is not the bank's expertise. So as long as they're willing to provide that API infrastructure, software providers that are experts can provide a beautiful experience, and then customers stay with Starling Bank because they have that integration. Some other examples of
just
yeah,
a quick
Khaled,
question.
Sure.
I think would it not be better if it is a co-creation, like the software company understand the API better than bank, and bank definitely understand the corporate business better than the software company. So if it is a co-creation, it would not be the best thing to do.
So yes, so co-creation works well. The challenge is typically, so I have seen over and over again, banks falling into a trap where they build one integration with a partner, and then they build another integration with a partner and another, and now a year later, they're managing 4 or 5 custom products, custom APIs that are for a specific partner use case, which doesn't scale because now you're managing, and now from the bank's perspective, each partner is additional IT work. The whole point of having standardized APIs is you can make this available for, for corporate, for corporate banking, transactions, balance, authentication, and payments. You can make that available to 1 or 10 or 100 different ERP systems, right? So product co-creation specifically with one ERP system would actually not be scalable in many cases. Now, of course, you can design it to be scalable, but if you're designing it as a co-creation, that usually becomes a custom project between bank and software partner.
So how does it will work? Like if it is plug and play, that means you have ready something, but you have to incorporate many of the things. Say it's local dynamics. I'm not sure how the information parameter, how to the spec of the API, how do you will create the strings of the API. It's based on the depends on the bank, many of the bank queries and bank expectation. And I'm sure that something in Singapore will not work or fit in for Bangladesh. So in any way, it has to be customized as per the bank's expectation. So if it is customized, then if it is co-created, it will serve the entire purpose of the bank.
So yes, fair point. I think the key, I guess my response is, if the bank approaches it that way, they need to think about this as, how do they make this co-creation? How do they make that same API available to other parties and other use cases? Again, just because the trap is, I build this because, and we co-create based on our needs, and then the next time we're undertaking an integration, we're starting from zero and building a custom integration. So it can be done, and the banks can learn a lot. And of course, the banks have their own, requirements. Each bank has its own requirements. It's a potential trap, because then you don't even need to have an API. Just provide a host-to-host server connection to your partner, and it just becomes an IT project.
So you're suggesting something like that is universal banking API, that it can be plugged in with any bank and it can play.
So I'm talking about the bank exposing its APIs to the partners that it's co-creating. So in the Starling Bank case, they have standardized APIs so that for Xero and QuickBooks and CyberSmart, they're consuming a set of standard APIs, and each partner that onboards, the bank doesn't need to do any custom building because the partners are just using the bank APIs. So the bank sets a standard, and then it's the partners that need to figure out how to integrate it, not let's design a project and connect, specific to this software product. So there's a little bit of a difference there.
That's example. But what I was trying to figure it out, that do you have some sort of universal banking API? That means the API you already have, it is applicable for any bank, and you can just plug in with me by today, and we can play. Is it something like that? Do you have something like that?
So
I'm sure it's not like that. So
I know.
you will build something based on our specification, and that specification will be very much standardized so that every other partner have to cope with that API. Is it?
So you're asking about how Brankas operates with this.
Yeah. Is there anything
Brankas?
like
Okay.
universal banking API?
There are, yes, for for the most standard use cases. So retail payments, corporate payments, authentication, balance, transaction history. Because that can be standard data fields across countries, across banks, right? There should not be too much different. Now, maybe one bank requires two-factor authentication at login and then to approve the payment. Maybe another bank requires two-factor authentication for sharing statement data, right? So those are minor things that can be accommodated in the API. So I would say yes, universal APIs for the basic transaction data and payments use cases. For the more complex use cases, no, they're it's not a universal API, and that would be, we're still pretty early for that. So like a loan origination API, there would be differences between countries and there would be differences between banks. Although where Brankas puts a lot of effort is standardizing things like account opening API. Because we have, and there are probably some fintechs on this call that would like to have offer bank account opening to their users, and they want to give their users some choices. They can open an account with bank A, bank B, bank C, and the user can choose to which bank to activate on the application, right? So that the more advanced product APIs are a work in progress, but the standard data and payments APIs, yes, you can say that they're universal because it doesn't change much market to market.
I think what Khalid bhai, if I'm not looking into it in the wrong way, just say, I think what you're asking is there any way that your bank can have access to an API publishing platform, which may be an open banking platform, and then make your APIs available to others or third parties for them to be able to connect, right?
Another way, it was like his thought answer is like that there are some universal set of API or universal banking API which is common for all.
Right. So basically, like, let's say, I don't know, a open banking platform, when they're connecting directly with you, you have your own standards, that's all there, but they will take it and then they'll standardize it and then publish it as a standard API format for others to use, right?
Yeah.
Okay. Circle can help.
I think I would suggest Todd to kind of finish the presentation and then probably open up the floor for questions.
Yeah, so I'll share these slides later. Here are some other use cases for kind of product APIs, right? Everything from card issuing, compliance as a service where you can actually do fraud and AMLA checks, even like FX transactions and things like that. So all I want to mention here is the banks that are under company, Rails Bank, Solaris Bank, CFSB, these are licensed banks that are very much behind the scenes, and the user facing is third-party apps. So these banks do not have branches. Well, Cross River and CFSB, they have like 1 or 2 branches in like Iowa and New Jersey. But they are basically powering, so in CFSB's case, every US dollar account, if you're holding funds with TransferWise, is sitting in Community Federal Savings Bank, which is a small thrift bank in New Jersey, in the US. So this is just some examples of banks that are completely thinking about distribution through APIs. So why do banks choose to adopt API products and partners? I think number one, it's a new way to acquire customers and actually keep those customers sticky and actually using your bank, because they can access your bank products in multiple apps. Right? So particularly for retail and SME, it's a way to create engagement and stickiness, and kind of integrated with their day-to-day activities. New fee revenue, where you can monetize payments, you can monetize data sharing, you can monetize identity and authentication. Platform revenue, so in the marketplace model, if you're bringing customers to a third-party software, that software should be paying you a platform fee for you bringing the customers to them. And that's certainly what Starling Bank is doing, and it's a big part of their fee revenue today. Data insights, where you can actually do better credit scoring, better targeted marketing, and build single customer profile across entities. That's particularly useful for conglomerates that want to have a single customer profile across the conglomerate. And then product innovation, where I, as the bank, do not need to build a e-commerce merchant financing product, because I can just create an API to live on the Tokopedia app.
Just curious to know, like in the last slide, why is it kind of open banking crossed out?
Because sorry, I meant to mention that. So I think open banking is a distracting term. open banking is the regulation in Europe and the UK. It's the regulation in markets like Bahrain and in UAE. But actually, open banking, what I've described today, all the examples I gave today, those are not a regulatory requirement. Like everything we're seeing in Southeast Asia, the loans, the data sharing, the account linking, the payments, that's all happening because the bank and the fintech sees actually a revenue opportunity in creating and managing these APIs, right? So when you talk about open banking, sometimes people will think that this is only data sharing or it's a compliance activity. And actually, I think we should be talking about API banking products because it's actually, you're offering banking solutions, you're just doing it in a new way that's actually better from a customer experience because the users are interacting with your products through an app that is designed for their use case. So that's why I crossed out open banking.
I think this is a very important point you mentioned because there is a lot of distraction actually.
Yep. No, and the biggest discussion I have with banks, and probably Red One can agree with this, I think is sharing with the banks that open banking or enabling APIs is not just like it's actually it can be a revenue driver for the business of the bank and not simply just something to do to say you're participating in open banking or to demonstrate to Bangladesh Bank that you're kind of open to open banking. But it's actually can be, you know, for the transaction banking, retail banking, digital banking, corporate banking teams, consumer credit and cards team, it can actually be a revenue driver. And shifting that model from IT cost and giving away data to, oh, this is actually an opportunity to unlock revenue. That's sort of a big hill to climb over.
Yeah, and also, you know, bankers do, some of them, well, I hope less and less over time, you know, they tend to fear that we are coming after their jobs. That's not true. It's more about complementing you to actually build up new
Yeah, I lost you the last bit, but I think, yeah, well put that the bankers are rightly worried about the future of the org. And I'll tell you, there's a very real world example here. There is one of the largest bank in the Philippines. The bonuses to the retail team are still, yeah. So
yeah.
Sorry, Red One Guy, we are losing you. Yeah, I think it's clear now.
Yeah. So I mean, there's a large bank in the Philippines that still gives the bonuses, the end of year bonus to the retail banking executives is based on branch sales. So a sale or a new product on an API is product activity that is not happening at the branch. So of course the retail people that are worried about you know, they're hitting their numbers, they're going to see this as a way, as basically losing their bonus, right? So there's real organizational challenges here as well. I know we're almost at top of the hour, and I'm sure we have other things to do. In another session, we can talk about some of the new open source and containers and the way that the architecture looks today in the open banking stack for those that are looking to publish APIs. I will leave you with one slide and then maybe 5 minutes of questions, which is there are more and more use cases in demand for API-based bank services. We went through some examples today. A lot of financial institutions are still in wait and see mode, right? So they say, well, let's wait for the early adopters. We'll wait for regulations, or the customer segment using these API products is going to be very, very small. So let's focus on bread and butter core business. And to that, my response is 3 articles from just the last 2 weeks. So Ramp, which is entirely corporate transaction banking and payables management in the US. They went to an $8 billion valuation. They are the fastest company to achieve $100 million annualized revenue in 3 years. and they just did a new round at an $8 billion valuation. The company was founded in 2019. Okay. Visa acquired Tink for $2 billion. Tink is an open banking product aggregator and product developer. They provide a bunch of white labeled open banking solutions in Europe that Visa acquired for $2 billion, and they completed the acquisition a month ago. And then the one on the right is Credit Kudos, where Apple made their first open banking investment. They acquired Credit Kudos, which is an open banking data company based out of Europe, because Apple is now going much deeper into open banking and fintech. So for the bankers that are thinking that this is a bit too early in Bangladesh for kind of API-based products, I would say that it may be early today, but even 6 months ago, 6 months in the future, it may be, things may be moving faster than you think. These are just, this is just the last 3 to 4 weeks, right? And there's even more. If I did one for just April, there would be another 3 or 4 companies, big deals in the emerging market, open banking or API banking space. So there, I know we're at the top of the hour, maybe a couple comments or questions and we can wrap up.
Shahadat Bhai, I think has one question. Shahadat Bhai, please go ahead.
Yes, thank you. It's a wonderful presentation, Todd, as usual. Nice hearing from you. So I would like to sort of understand how the fintech bank collaboration may work. Like we are hearing even in this call, we have bank Khalid Bhai asking questions from certain perspective, and then we have Ridwan Bhai kind of responding in some other way. Can you give some examples of how do you break that ice and then make some sort of a meaningful business for the fintech, like winning the trust and confidence from the bankers?
Yeah, that's a great question. I'll repeat my comment earlier, which is, if you offer open banking or API banking as a new IT solution, that conversation has a very low probability of success, because it sounds like, well, it sounds like risk. It sounds like we already have IBM or Accenture supporting us, and and they don't have the capabilities, and actually they just want to update your core banking system. So the conversation should be focused on revenue, that API products can be a business driver for the bank. Now, the next step is, Shahadat Bhai, is what does that bank care about in terms of digital products? For some banks, they want to really build out their consumer loan portfolio. And if that means that they, that they partner with, with companies that can do loan origination on their behalf, or loan servicing on their behalf, or at a minimum lead generation into something that the bank manages, then that's meeting their message. If the bank is concerned about engagement and making sure that customers use that bank as their primary bank, then you can go from an engagement perspective and say, hey, let's make your bank plugged into multiple fintech solutions so that customers can use your bank day to day in their activities. If it's a very commercial, corporate focused bank, which many emerging market banks are, that's where they generate their profit, then you can focus on offering basically digital first solutions to the technology companies that are doing massive volumes in transactions or loan books, but that need a digital solution from their bank partner that plugs into their ERP or their own workflow.
Yeah, I know it's not very easy, it's right away, like, can you kind of or do you have any examples or any example handy? Say, hey, this worked, like, say, you mentioned few, okay, increased revenue, and then like, in India, this company went there and really increased revenue, right? You see, US, you have given EU example, but those examples are sometimes a little far away.
Yep.
So that's why, like, we're very interested on, your experience in the region. Say, okay, well, This is one case where it is really working. And so some real revenue success case for the bank, and then kind of a sharing success case from the fintech.
So I'll give a very simple answer, payments. Because payments today, if you as a bank can make sure that customers can do a pay by bank solution everywhere they transact, then that is going to be new transaction fee revenue for the bank. You're not going to be sharing that with a payment gateway because you can offer it directly. It keeps your customers sticky because they're using their bank account for transacting, and they're building up credit, basically credit scoring, because they're transacting and it's coming across the bank's books. So anyway, so retail payments and corporate disbursements is usually the easiest starting point because banks can charge for it. It increases engagement, and it's usually top of mind for fintechs or for e-commerce that want to have a bank API. So that is typically the easiest starting point. And what I'm talking about is something like this, where I can link my bank account to my e-commerce site or my remittance, or I want to buy gold, or I want to repay a loan, or I want to send a remittance, and I can just link my bank account and do the flow and link, access and use my bank account, but on a third-party app.
Thank you very much. I wish the example was not payments because we have a lot of payment discussion already. That's a separate track. And then in Bangladesh, we're kind of stuck because we don't really have a payment solution, payment interop. We are trying to, or we're dreaming of building something like UPI, but so if there was any other example that would be suitable, but thank you very much. That's very helpful.
Yep. No, I mean, the other example is credit products, right? Which I was sharing earlier. And if you can change, if you can allow third parties to do the onboarding on your behalf as a bank, and you can, during that flow, provide some kind of consent-based data sharing, then that is a 10x experience relative to the normal go to a branch, print out documents, share the documents, financial statements with the bank, and then the bank comes back after 1 month, right? So those are the low-hanging fruit. I think the other stuff, account opening, card issuance, are really, really interesting, but that usually comes after payments and credit.
I have a couple of questions. Like, first of all, like, I think the whole thing that you mentioned all is on the foundation of data sharing or concept-based data sharing. Now we live in a world which are kind of very wary about this protection and all other things that have been going on out. So, and unfortunately, these kind of data protection things are not in the managed by the central bank. It is also managed by some other kind of ministry and other thing. So have you found it even in the Southeast Asian thing that this kind of like a trade-off between data sharing and data protection that creates a kind of bottleneck in opening up this kind of API based thing? Number one. Second one is we have been kind of discussing or kind of overcharged on the term digital banking. So now you have actually deliberately cut out on this kind of open banking. So I was just wondering that the legacy banks, can they also be very open to this API based things rather than only new breed of digital banks? So my question is whether digital bank is a much more fast track thing than a legacy banks adopting open API things.
Yeah. Okay. So first question, yes, Southeast Asia is mostly unregulated on data protection and open banking data sharing. Indonesia, it's basically unregulated, and in the Philippines, there is a national privacy commission. So there's one single agency that manages data protection. But I would say most countries have some legislation, some law for consumer data protection. And so, Fahim, by the main principle of open banking data sharing is explicit and informed consent. So making sure that if you're providing some kind of data sharing, that the customer has agreed to share their data, they know what they're sharing it for, They know what the terms of that sharing are, right? And they have some very clear transparency about what they're actually doing when they share that data, right? So frankly, like we have a regulatory affairs team, and most of our time with the regulators is spent getting them comfortable with the consent driven model. Like basically, what sort of comfort does the regulator want to see to ensure that the customer indeed has given consent, right? So that's on number one. So basically, yes, Southeast Asia is unregulated, but where we focus is on making sure that the consent process is legal, valid, and reasonable. Okay. On the digital bank side, I think there's a lot to say here, but the traditional banks, I think that the traditional banks are actually even better candidates for API banking, because traditional banks are probably bad at building apps. And so, so for them to now build a new app, you know, they probably are not really looking forward to it because it's a very expensive process. They don't have internal teams for it. And so they just need to pick a vendor to build a new app, and they know that it's going to be a headache. So a bank should have their own app, of course, right? But by providing the API infrastructure, they can actually kind of leapfrog, and instead of offering their own app channel, digital banking channel, they can provide an API so that the consumer and SME apps that are really, really good at user experience can have that integration early in the adoption curve.
Todd, I have one question.
Yeah, go ahead.
Hello. Yeah. So regarding the API banking, actually, we are talking about the API will generate the revenue. That is what I understood. But you know, to have a scalable API services, bank actually need to build some kind of platform to leverage all those APIs and to open those APIs to the fintech company to collaborate with them. But my question here is how actually bank will measure the exact or the kind of revenue projection, how much they are going to get if they build this kind of APIs. How actually bank is going to measure how many APIs they can share, and what will be the the ROI, or what will return from that particular building that API platform. How actually bank that measure?
Yeah, good question. So first of all,
can you introduce yourself first? Like you are representing.
Yeah, I am Sanaul. I am from UCB, United Commercial Bank.
Okay, thank you.
Great, thank you. So first of all, when you set up APIs, you don't need to launch all of your APIs at once. You just need the developer portal and the connectors to the core banking system, and then you can just launch one API at a time. So maybe you launch the payments API first. I would say the best way to do the business case here is identify your first 3 or 4 companies that are going to be using that API, your client companies using that API, and then get volume estimates from them. It's that simple. And then in terms of pricing, I mean, it depends on the market, but just, you know, I would base it on, you know, there are probably 3 or 4 large, in the case of payments, for example, there are probably 3 or 4 large platforms, maybe e-wallets and e-commerce, right? And maybe a remittance company that want to access that API and can immediately bring you volumes on day one. And so the other option is you look at payment partners that are actually reselling the API on your behalf. And then you can get volume estimates from them. And I will tell you also, I shouldn't say this because I don't like agreeing to it, but some banks do ask for committed revenue. So Brankas, for some banks, we will make a commitment that we will deliver X amount of revenue minimum in 12 months back to the bank. Because that is our way of saying we are confident about the volumes that we're going to bring you. So those are a couple ways to do it, depending on how aggressive you want to be with your partners.
Thanks.
Yeah, so we're a bit over time. Maybe one last question and we can wrap up. I just want to be conscious. I'm sure we all have stuff to do.
Abdul Ghaffar Bhai, you have one question. Please go ahead.
Thank you very much. I'm Sadi from Druto Loan. I wanted to ask that in case of SME financing, the borrower needs instant loan disbursement. The the lending process, the acceleration in the lending process is critically important for the borrowers. Can you please tell me how the cloud API or the API integration can help in this case?
Yeah, so I think the best example here is the Tokopedia example, which I mean, I'll share the slides in the document afterwards, but basically it's you provide some basic parameters for instant approval so that certain types of borrowers with certain types of verified data can instantly qualify for the financing, and then they can onboard and get funded all through the same application flow. And we see this a lot, especially in Indonesia, Philippines, and Vietnam. But you can start with a very, very narrow set of borrowers, and then you can expand from there once there's some comfort about the repayment and credit worthiness. So that would be the starting point.
Thank you. But can it be like a collaboration between banks, fintechs, and other SaaS companies, such as there are many business assistants that, which are used by the retailers to maintain their bookkeepings and all those things. So is this integration is possible in open banking or API integration?
Yeah, certainly. So especially in e-commerce. So e-commerce companies that are providing merchant financing or buy now, pay later for customers, they will share e-commerce transaction history back to the lender so that the lender can make a decision based on that e-commerce transaction history.
So what I'm asking is that is instant loan disbursement decisions. I mean that can these systems take instant decision on lending a customer if he's verified earlier?
Yes. Yeah. So the at least the intention with these API loan products is for instant decisioning, and the loan management system on the back end is providing that instant decisioning.
Thank you very much.
Yeah. Yeah. Okay, Anik, over to you.
Right. Awesome. I think this was an extremely engaging session. Thanks a lot for everyone who joined and also asked the question. Todd, thanks a lot for your time and going through the slides. I hope it was useful. So I think after the call, we'll share the material with you so that for your reference. And obviously you can get in touch with me through the group, get in touch with Todd as well. You can add him on LinkedIn. And yeah, happy to help if if there's any other queries or if if there's anything Brankas can help out with. Thanks a lot, everyone.
All right.
Good.
Thanks. Have a great week, everyone. Take care.
Thanks,
Thank
Todd.
you.
Thanks,
Nice.
Todd.
Yeah. Thanks. Take care. Have a nice day.
Bye.